Alphabet, Google's parent company, disappointed Wall Street with its earnings report yesterday, as the tech giant missed analysts' expectations by $7 per share, bringing Alphabet's stock down several points in after-hours trading. Alphabet, Google, posted disappointing second quarter results on Monday. Google posted disappointing second quarter results on Monday, with revenue of $26 billion for the quarter that ended on June 30th, up 12% from the same period last year, but the results point to a flagging demand for digital advertising and could show broader problems with the global economy. Alphabet saw no growth in its so-called paid clicks, which are an important metric because they measure how much advertisers are willing to pay per ad, and the company has faced increased competition from Facebook, FB, and Snap. That adds to other evidence that the company might be struggling with pricing. Google's earnings are out for the third quarter of 2018 and there is not much good news. The company reported $3.4 billion, or $9.57 per share, on revenue of $33.7 billion for the quarter, which is up 18% from last year but fell short of analysts' expectations of $11.83 per share on revenue of nearly $36 billion. Shares dropped by as much as 8% in after-hours trading following the announcement, marking the biggest single-day decline since January 2012 when Alphabet shares dipped by 10%. The reason for this, one possible explanation may be flagging demand for digital advertising. Two ways we can determine if Google is having troubles. Google's second quarter earnings fell short of Wall Street expectations, and its shares dropped more than 6% on the news. There are two likely reasons for Google's disappointing performance: flagging demand for digital advertising and problems for the broader economy. As Alphabet CFO Ruth Porat noted, there was no indication that advertisers were shifting their budgets to YouTube TV or DoubleClick from search ads or any other business. A slowdown in the global economy would result in a decrease in ad spending because marketers would want to shift money towards saving costs instead of investing it on promotions and marketing campaigns. 3 reasons this isn't just a Google problem, it's an internet problem. 1. This is not just a Google problem, it's an internet problem. The growth rate for Alphabet revenues from so-called internet advertising slowed to 15% from the 24% recorded for the first 3 quarters of 2017. 2. Mobile is hurting digital advertising revenue. Mobile ads on Alphabet sites grew by only 10%. They were more than twice as lucrative as desktop ads, generating about $4 per thousand impressions. 3. Facebook and Snapchat are also seeing major declines in ad sales. Facebook CFO David Winner said that total revenue growth rates will continue to decelerate in the second half of 2018, adding that this trend could be partially offset if people use our products more over time. Snapchat has warned investors that our business could be harmed if its new premium advertising products are unsuccessful, and Chief Strategy Officer Imran Khan says ad quality needs improvement because some users find ads irrelevant and annoying. 4 things you should know about revenue deceleration. 1. Alphabet saw an 18% year-over-year increase in advertising revenue, from $28 billion to $32 billion. 2. This is the smallest year-over-year growth since Q2 of 2015. 3. In contrast, Facebook reported a 51% year-over-year increase, from $6.8 billion to $11.9 billion. 4. Alphabet's earnings missed analysts' estimates by nearly $10 per share. 5. And there are signs that some digital ad buyers are trying to curb their spending on Google, which may not bode well for other tech giants and content creators. 6. Investors have been pouring money into companies like Alphabet and Facebook because they have been seen as a proxy for economic growth more broadly, but it now appears that this thesis may be running out of steam. Source: MarketWatch. 5 additional items of interest in Alphabet's report today. Google parent company Alphabet posted earnings of $7.26 billion on $24.8 billion in revenue, both of which were up significantly year-over-year, but the company missed analyst estimates for earnings per share by nearly $2, and its stock price fell 6% on the news. The miss seems to point to flagging demand for digital advertising and problems for the broader economy at large. Alphabet has been looking to grow its non-advertising business, particularly in cloud computing and hardware with products like Nest thermostats or Pixel smartphones, yet these divisions accounted for less than 10% of the company's revenues last quarter, underscoring how much is riding on the success of Google's core search engine business.